A bill titled to amend the Internal Revenue Code of 1986 to allow a non-refundable credit for elementary and secondary school supply expenses was introduced by New York Representative Michael Lawler on December 11, 2023. This bill adds an entire section to United States Code Title 26, commonly called the Internal Revenue Code of 1986, that will create a new tax credit for elementary and secondary school supply expenses paid for by the taxpayer. This means the total amount of school supplies expense paid for will be taken out of how much tax money is owed by the taxpayer. There are two limits to this credit. First, a maximum of $200 can be credited, meaning you can only pay up $200 less in your total tax, or get paid an extra $200 if you earn a tax return, each tax year you pay enough school supply expenses. Second, the maximum limit is reduced if you have a modified adjusted gross income over $150,000. It is reduced by a percentage that you can determine yourself, as follows. Take your modified adjusted gross income, we will use $170,000 as an example, subtract $150,000. Take that number and divide it by $65,000. Multiply that number by $200. Subtract that number from $200, and that is the total tax credit you will receive. Using the example of $170,000, you should get a tax credit maximum of $138.46. It should be noted that this limit cannot be reduced below $0, meaning if your modified adjusted gross income is $215,000 or more, which is $65,000 more than $150,000, you will not get any tax credit for school supply expenses. This bill defines modified adjusted gross income for use during tax preparations. School supplies are defined as books, supplies, or any other expense required to attend public, private, or religious elementary or secondary schools that are not purchased or acquired through the use of a Coverdell Education Savings Account. This bill will take effect for all taxable years after December 31, 2023. Primary impact: school supplies are not cheap, when taken into account that they must be purchased every year and there are quite a few of them to buy each time. This tax credit will take some of the financial burden off families that are putting children through school. This financial relief is delayed, but is relief nonetheless. This will generally increase the educational potential of children that would not have been able to afford, or would not have been supplied with school supplies, as they would now have the same advantages other children would have. Better education is an overall benefit to a nation. Secondary impact: this bill does not stipulate that the credit is per child, only per taxable year. Since elementary and secondary school spans kindergarten through 12th grade, a family can have several children attending school at any given time, meaning this tax credit is used rapidly before even getting to child 3 or 4. With this tax credit spread out amongst several children, the benefit is diminished with each additional child. If people were to take this into consideration before having children, which I don't believe many would, it could reduce the overall number of children people are will to have. Financial burdens are a great factor in reproduction. Tertiary impact: any tax credits of this nature will increase the overall demand of these goods and service as more people are able to afford them. This increase in demand will increase price levels for all, including those that are not benefiting from the tax credit. Inflation will likely always occur from any government intervention, including low-threat, ubiquitous areas like school supplies. Inflation in one sector has ripple effects that span to others, especially since school supplies are very closely tied to office supplies, which are used universally in many businesses.